A massive new law just dropped. It's called the One Big Beautiful Bill Act, or OBBA for short, and it's about to change pretty much everything, from what's in your paycheck to how you plan for retirement. So what does it actually mean for your wallet? Okay, let's dive right in and break this whole thing down. To figure this all out, we're going straight to the source, the official policy overview and text guide from Army Accounting. This guide is our key to cutting through all the noise and getting to the clear, practical details we all need to understand this new financial world. So here's our game plan. We're going to start with the big 30,000-foot view of what this law even is. Then we'll zoom way in to the specifics that hit you directly, the tax breaks and the safety net changes. After that, we'll pull back out to see the winners and losers, what this all means for the economy, and finally, we'll land on a concrete action plan that you can actually use. All right, first things first. Let's just try to wrap our heads around the sheer size and scale of this new law. So this thing was signed into law on, of all days, July 4th, 2025. And it's truly one of the biggest shifts in U.S. policy we've seen in years. So the question on everyone's mind is pretty simple. What in the world is actually in it? At its heart, the OBBBA, and yeah, that's a mouthful, is this giant piece of legislation that completely reshapes four key areas. It's not just about your taxes. It also overhauls social safety net programs, changes immigration rules, and tweaks energy regulations. And this is the important part. The changes in one area are designed to pay for the changes in another. Okay, now for the part you're probably most interested in. Let's really zero in on what this means for your money, the new tax breaks. The very first number that just pops off the page is $6,000, and this is a brand new deduction aimed directly at seniors. Now, what's really great about this new senior deduction is just how broad it is. If you're a taxpayer who's 65 or older, boom, you get an extra $6,000 deduction. A married couple? That's $12,000. And the best part is, you don't even have to itemize your deductions to claim it, though it does start to phase out if you're a higher earner. All right, next up, $25,000. And this one is for a massive group of workers out there. This is a pretty big deal. The law now lets you deduct income you make from tips and overtime. You can write off up to $25,000 in qualified tips and another $12,500 in overtime pay. So think about it. If you're a bartender and you report, say, $22,000 in tips, you can now deduct that entire amount. It's just gone from your taxable income. Same for a warehouse worker who puts in $10,000 worth of overtime. All of it deductible. And for all you homeowners out there, especially if you live in certain states, this next number is a huge, huge deal. $40,000. So the OBBBA basically quadruples the cap on the state and local tax deduction. You've probably heard it called the SALT deduction. It goes from $10,000 all the way up to $40,000 for married couples. This is a game changer for homeowners in high tax states. Places like New York, New Jersey, and California. For a lot of families there, this change makes itemizing deductions a no-brainer again.